Hello and welcome to the September 2025 edition of the Market Update by Kingdom Focus Financial. With us today, we have Michael Smith, Chuck Etzweiler, and myself, Derek Malden. Take it away.
Derek, you crack me up every time you do that, man. You sound like a game show host and
just trying to make it lively.
Oh, I love it. Welcome, everybody. Good to have you here for another month of information related to the markets. And wow, what a month we have. We're into September. You guys have been around long enough to know that historically September is number 12 out of 12 in the months. It's the one we don't like. It's the one we leave out in the cold when we shut the door in the warm winter. We don't like September. However, it's important to understand trends and statistics, and so we want to bring you some good news in September this month as we talk about our portfolios. And Chuck, I know you've put together some really good info for us, so tell us what you got.
Well, thank you, Michael. Great to be with you and Derek, and certainly our investors here as we climb into the month of September. You're right. We've dubbed this September Morn. If you think of the classic Neil Diamond song, September Morning, it's spelled M-O-R-N-I-N-G as per the time of day. We spell it M-O-U-R-N, like you just says, as in lamenting that we have to go through this month. Now, statistically, even if you go back 100 years, but most recently the last 75, the last 20, the last 10 years, it's the only month that consistently averages a negative return. So we've been speaking to this for several years, suggesting to our investors that there may be a lull in the market. Now, we took it one step further, Michael, and we have a slide that actually shows this. We went back 75 years, again, to 1950, and we ran post-election years in a combined line chart. So basically, last year, 2024, was a presidential election year. And if you look at a line graph of this, you can basically see that we move almost from, let's say, where I am in San Diego, California, driving a vehicle, and you go all the way up to Portland, Maine. Now, there's some little dips in the road, but that's typically the run rate. However, if you look at a road map and you're to picture this in your mind, as you kind of enter the state of Ohio, you take kind of a southern route, and that typically begins in August, lasts through September. But Michael, you said it oh so well, there is better news ahead. Historically, once we enter the month of October, that October, November, and December tend to be seasonally really good months of the market. I know most people associate October with some blow-ups that have happened in the past, but in post-election years, that's what the actual scale in the map looks like. Now, interestingly enough, if you lay over the year of 2025, boy, they're in sync together in a great fashion. We talked about this the last time we spoke. We had talked about how April showers bring May flowers, and that the two most pivotal months, seasonally speaking, are actually May and September. So think of these as bookends, folks. And when you have a really good May, like we did this year, and remember, it was a huge reversal from what happened in April. Remember April, Liberation Day, all the way up to April 8th, 13% sell-off, and boom, the rally happened, and it really lasted for 3 months. But historically, if the months of May are better than 5%, you go out over the next year, the average rate of return is nearly 20%, guys. And it's 100% probability. The same thing with September. Septembers tend to be lousy months. But if we get a good one this year, possibly the rate of return going out over the next 12 months is historically plus 20. Now, that's a big if. But again, we're watching this exceptionally closely. I think the really good news, and you teed me up really well with this, Michael, is that if you actually look at what happened, again, post-April, and I think this is a lesson to be learned, and I know I'm preaching to the choir here because our investors certainly have a structured plan in place. They work with a trusted financial advisor team, but maybe some that don't, that may be listening to this podcast, is that people actually extrapolate headline news. They read it with the understanding that this is new to everyone. And I can rest assure you, working in the institutional investment world for many years, we have high frequency data. We have other sources of data than just the regular news wire. And that's why you see sometimes going against the grain of conventional wisdom. We saw a turnaround in April, unlike we have seen in a long, long time. I think you got to back to COVID, then you have to go back even further. And the reason I'm mentioning this is we had an aggregate return of 25% off of that April 8th bottom and working itself all the way up until early August. But guys, if you combine May, June, and July together, 3 positive months in a row, it's kind of rare. This has happened 15 times over the last 75 years. Again, going out over the next 12 months, the average rate of return is 14. So the bottom line here is, yes, the seasonality factor probably is starting to work in its historic norm. We're seeing kind of the beginnings of a pullback here in mid to late August. We then probably enter September again with maybe a slide off, specifically maybe in the big winners. But again, we believe that we're in a secular or long-term bull market, that the automation technological revolution is for real. Mm-hmm. It is the 4th industrial revolution, I think, that the United States has undertaken in its brief 250-year history. And we're really looking at the end of the year finishing strong. I'll mention one other thing, Michael and Derek, and I'll pass it back to you guys so we can wrap this up. You know, there's kind of this misnomer, and I know a lot of people think this way because, again, it's logical, that who would ever want to invest cash at an all-time high or close to it? And again, it's proper thinking. You want to buy low and sell high. But we went back, again, all the way to 1950. And when you actually think about this, the number of all-time highs occur once every 3 weeks. It's actually once every 14 trading days. And if you actually look at the median return, so let's say you were to invest at an all-time high and you were looking for that great pullback and it didn't happen, at the all-time high, if you take the 1,250 times they've occurred since 1950, and you then look out the next year, the median rate of return is 13.5%. And the percent of the time higher, it's 82. So to try and time this, guys, is very difficult. The reason we put this together is to kind of give our investors just a little bit of a heads up that we're entering a seasonal period that historically is choppy. But again, we look at the longer term, and my goodness, if we're in the midst of this 4th industrial revolution, we're probably only in the 3rd or 4th inning of a 9-inning game. We're really looking forward to dialing up, if you will, investment opportunities as we look out into the horizon.
Yeah, I very good stuff, Chuck. And I think it's important for everyone to really catch that, right? And highlight that. We get questions sometimes, well, if you knew this was happening, why didn't you pull me out of the market, right? Well, right. We don't ever know for sure what's coming in the future. But we use statistics to give us really good predictor methods, right? And to give us very educated guesses is the best way I can put it, where patterns tell us what's likely to happen. And this is one of the more strong, stable predictors that are here, right? And I'm going to use an analogy. And those of you who have worked with me for a while, you know I like analogies and stories. But think about it like you're on a long trek, right? And you're cruising down the highway at 70 miles an hour. And I'm sorry for those of you in the Midwest. I know that's going slow for you, but here in PA, that'd be cruising along pretty good. And you run low on fuel. And so you're going to pause, you're going to get off the exit for a little bit, you're going to fill up with gas, and then you're going to hit that highway and you're going to get it right back to 70 and off you go. The market's no different, right? And so for the last couple of months, we've been cruising down the highway. We've had some really strong returns. And it doesn't mean the trip's over. It doesn't mean anything's broken, but we're saying, hey, we're at a point that gas gauge is getting a little empty. There's not a lot of economic data that comes out. And so just expect that at some point, it's kind of like when you're sitting there and you're going, when's the next rest stop? Well, it's coming up. It's coming up. And that's kind of where we're at with this market. It's like we don't know where it is, but it's coming up. And so that's what we want everyone to understand is it's okay. And we think that we're going to get back on the highway and get rolling again shortly after that.
Yeah, absolutely. And in this time when we do get that rest stop type situation in the market, that's when we do lots of planning opportunities. We can do some tax loss harvesting. We can do some Roth conversions, that type of stuff. And if you've been with this a while, you kind of know how that works. So we'll be reaching out. Or if you have questions about that, you can reach out to us and we can look through that with you.
Yeah, perfect. Hey, Chuck, thanks again. As always,
Pleasure.
Good stuff. And I want to wish everybody a happy back to school, right? We're here in September, and I know if you have kids or grandkids that it's been a flurry the last couple of weeks as things are settling into our fall routines. But thank you for taking the time to listen to us this month. As always, we appreciate the trust you have in us. If you found this informative, if you haven't subscribed yet, hit that subscribe button at the bottom of your screen, not the one that flashes, but actually there on the channel, so that you can get frequent reminders whenever we post these, and invite your friends to watch our videos as well. Thank you very much. I hope you guys have a great month.